Is HHIS still paying that insane 27% yield, or was it just a launch illusion? If you've seen the original video, you know why investors couldn't stop talking about the Harvest Diversified High Income ETF, ticker HHIS. It promised something unheard of in traditional finance, a 27% annual yield, paid monthly. But months later, people are starting to ask the real question, can it actually keep this up? Because let's face it, when something sounds that good, Wall Street usually finds a way to balance the scales. So, let's get real. Is HHIS still paying around 27%? As of the latest updates, it's still hovering in the same range. Payouts between 23% and 28% depending on share price and market conditions. Some months fluctuate, but that's the nature of active income funds. What matters is that it's still delivering consistent cash flow. Investors report distributions arriving every single month without interruption, even through volatile quarters when tech stocks dipped. That consistency alone is impressive, but before you pour in your life savings, let's step back. Here's what's really happening behind the scenes. HHIS isn't just one ETF, it's 9 engines firing at once. Each holds covered call positions on stocks like Amazon, Microsoft, and Nvidia. Every month these positions generate cash from selling call options. That cash gets combined, converted to USD equivalent, and distributed to investors. And because those stocks are volatile and high demand, option premiums stay attractive. That's why HHIS continues to perform as an income generator, even when markets cool off. But there's a trade-off. If one of those stocks takes off, like Nvidia did earlier this year, HHIS gives up some upside because the covered call caps gains. You'll still earn income, but your price appreciation might lag behind a pure growth ETF. And that's the point. HHIS isn't built for rocket ship growth, it's built for predictable cash flow. That's its superpower, and its limitation. So let's run a new scenario for today's investors. Say you invested $50,000 6 months ago. The fund price hasn't skyrocketed, but you've received roughly $675 per month in distributions. That's about $4,000 so far, without selling a single share. Even with mild price fluctuations, your total return sits comfortably in positive territory. Now imagine that income compounding month after month for years. That's the power of high-yield consistency. It might not make headlines every day, but it quietly builds financial independence behind the scenes. Still, let's be honest, the risk factors haven't vanished. Covered call ETFs face potential NAV erosion if markets fall sharply, and leverage, around 25%, can amplify both gains and losses. So while HHIS might look unstoppable, it's not bulletproof. That's why smart investors treat it as one layer in a diversified portfolio, a cash flow engine, not a one-stop solution. You can pair it with growth ETFs, defensive assets, or even cash reserves to smooth the ride. But here's what's remarkable. HHIS continues to attract both US and Canadian investors, despite all the skepticism. Why? Because it actually does what it says. It pays you every single month. That predictability is what sets it apart in a world of uncertainty. And maybe that's why HHIS has built a loyal following. Not because it's perfect, but because it's transparent. You can see the holdings, the distributions, the strategy. No mystery, no hype. So when someone asks, is this fund still the king of monthly income ETFs? The answer, at least for now, is yes, but with a crown that needs constant polishing. Because the real story of HHIS isn't about chasing yield, it's about balance, balancing risk and reward, income and growth, fear and patience. If you understand that, HHIS can still be one of the most powerful cash flow tools in your portfolio. But if you expect it to be a get-rich-fast machine, it's not that. It's a disciplined income system that rewards consistency over excitement. And maybe that's exactly what most investors need right now. Thanks for watching. If you found this breakdown helpful, hit subscribe to MoneyQuest Broker and join a community of smart investors who value clarity over hype. Drop a comment below. Are you still holding HHIS, or have you shifted to other high-yield ETFs like DGRO, SCHD, or ULTI? Your thoughts might help someone make a smarter decision today. And as always, this video is for educational purposes only, not financial advice. Always do your own research or talk to a qualified advisor before investing. See you in the next one.